we're operating at a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years, because there's never been a country like the United States. But you know that if something can't go on forever, it will end, to quote Herbert Stein, a famous economist, and we are doing something that is unsustainable. If it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy.
Today, Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations? Are you encouraged you may see some fat pitches coming your way?
Yeah. Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on. The amount of cash we have is... we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, those decisions are not tough to make. When something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've been in 200 trading days times 80 years, 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and they were expected to be equally attractive. You know, if I was running a numbers racket, every day would have the same expectancy of that I would keep 40% of whatever the handle was. And so the only question would be is how much we transacted. But we're not running that kind of a business. And so we're running a business which is very, very, very opportunistic. Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50. And that we never concentrated enough, so that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually, for people who are passive investors just to make a few simple investments and sit for their life. But we've made the decision to be in the business, so we think we can do a little better than that by behaving in a very irregular manner. But if you told me that I had to invest, let's say that we have a roughly $40 billion a year coming in, and we start with 335. If you told me I had to invest $50 billion every year till we got down to $50 billion, that would be the dumbest thing in the world to invest in that manner. Things get extraordinarily attractive very occasionally. The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about, but it has no value. I've never found anybody I wanted to listen to on the subject. On the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, The Treasure Hunt, and every now and then you find something, and occasionally, very occasionally, but it'll happen again. I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years. And then the probabilities get higher as you go along. it's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch. Particularly if you're a male. I mean, all the records are held by females in terms of age. And I tried to get Charlie to have a sex change so he could test out whether... He did pretty well for being a male, I'll put it that way.
As the U.S. dollar quickly loses value in relation to other foreign currencies in 2025, is Berkshire Hathaway taking steps to minimize this currency risk and its impact on quarterly and annual earnings?
The Japanese situation is different because we do intend to stay so long with that position, and the funding situation is so cheap that we essentially have attempted to some degree to match purchases against yen-denominated of funding. But that's not a policy of ours. In fact, that's the first time we've done that. And we've owned lots of securities in foreign currency. So we do nothing in terms of the question about its impact on quarterly and annual earnings. We don't do anything based on its impact on quarterly and annual earnings. I mean, there's never been a board meeting I can remember or the conversation I had with Charlie where I say, if we do this, our annual earnings will be this, and therefore we ought to, whether it's accounting or whether anything, we just, the number will turn out to be what it'll be. What counts is where we are 5 or 10 or 20 years from now. And if you start focusing on what number you're going to produce, you will quickly get tempted, at least based on the experience I've seen from viewing 20 companies. You will get so you'll, one way or another, play around with the numbers, and sometimes seriously play around with the numbers. And I've seen people that, I trust them in all kinds of other ways, but they regard playing around with numbers as perfectly okay. And that's just not something, we just don't think about that. So actually the relationship of the behavior of the yen in the last quarter resulted in certain gap charges, and it doesn't make any difference. It'll change next month or next year. And obviously we wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency. I mean, the tendency of a government to want to debase its currency over time there's no system that beats that. You can pick dictators, you can pick representatives, you can do anything. But the people, there will be a push toward weaker currencies. And of course, that is, I mentioned very briefly in the annual report that fiscal policy is what scares me in the United States because it's made the way it is. And all the motivations are doing a lot of things that can cause trouble with money. But that's not limited to the United States. It's all over the world, and some places it gets out of control regularly. As they devalue at rates that are breathtaking, and that's continued. I mean, people can study economics and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money, and you will, or you can engage in clipping currencies like they used to do centuries ago, or there will always be people. It's the nature of their job. I'm not singling them out as particularly evil or anything like that, but the natural course of government is to make the currency worth less over time, and that's got important consequences, and it's very hard to build checks and balances into the system to keep that from happening. And we've had a lot of fun here in the last, either the first 100 days or the last 100 days, whatever you want to call it, watching what happens when people try to make sure that they aren't running fiscal risks. And that game isn't over, and it never will be over, in finality. If you look up in search, the great inflations of post-World War II, it's just a list that goes on forever, and the same names keep popping up and everything. So the value of currency is a scary thing, and we don't have any great system for beating that. We do in this particular Japanese position because we expect to hold it for 50 or 100 years or more. And we will be owning something that's denominated in yen and easily predictable. And we'll just, as long as the carry on it is right and everything, we'll attempt to issue Japanese denominated liabilities. But that's not because of anything we carry about in terms of quarterly or annual earnings.
In a 2003 Fortune article, you argued for import certificates to limit trade deficits and said these import certificates basically amounted to a tariff. But recently, you called tariffs an act of economic war. Has your view on trade barriers changed, or do you see import certificates as somehow distinct from tariffs?
Yeah, well, the import certificates were distinct, but their goal was to balance imports against exports, and so that the trade deficit would not grow in an enormous way. In fact, it had various other provisions in it to help third world countries at that time, as they were called, to perhaps catch up a little bit. And they had a variety of aspects to them, but basically they were designed to balance trade. And I think you can make some very good arguments for the fact that balanced trade is good for the world, and the more balanced trade there is, the better. It will continue to be better for cocoa to be raised in Ghana and coffee and Colombia and a few things. And over time, the American industry has gone from being an agricultural country. This was nothing but an ag country. I mean, virtually, and that was only 250 years ago. And we have become a very industrial country, and we did not want to make that a situation, in my view, where we ran greater and greater deficits, building up greater and greater debts against the country. So I designed this import certificate thing, which Charlie thought was a little rude, too much like Rube Goldberg. I don't know whether that name is, but it's gimmicky. But it's certainly a lot better than anything I think than we're talking about now. And there's no question that trade can be an act of war. And I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think that's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So my import certificate idea, which went no place, I think we've got extra copies. We've not a great demand for the copies. If anybody did, and if you'd like, and write the office, I think we could probably send you a copy of it. But the main thing to do is not use, trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing 250 years ago. There's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and with them, the safer we'll feel, and your children will feel someday. So don't expect my import certificate idea to go down there with Adam Smith's wealth of nations or anything.
Do you think the net benefit of Doge will be positive or negative for the long-term health of the United States?
Well, why don't you give me a hard one? I think that bureaucracy is something that is amazingly prevalent and contagious even in our capitalist system. And big corporations, overwhelmingly, most of them look like they could be run better. I'm sure Berkshire does in many respects. And government is the ultimate. So it really doesn't have any checks on it. And that's why it scares you to some extent about what the future of the currency will be, because they can print currency. And if you have people that get elected by promising people things. And that doesn't mean that they aren't sincere about all kinds of items, but there's no politician that says to anybody that, at least if they have money, that, I really think you have bad breath, and if you don't mind, would you step over away from me? It just doesn't happen. I think the problem of how you control revenue and expenses in government is the one that is never fully solved and has really hurt dramatically many civilizations. And I don't think we're immune from it, and we've come close to it. But if you tell me in a democracy, you go in and really change things. We're operating at a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years, because there's never been a country like the United States. But you know that if something can't go on forever, it will end, to quote Herbert Stein, a famous economist. And we are doing something that is unsustainable. It has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially you just give up on it. And Paul Volcker, kept that from happening in the United States. But we came close. We've come close multiple times, and we've still had very substantial inflation in the United States, but it's never been run away yet. And that's not something you want to try and experiment with, because it feeds on itself. I wouldn't want the job of trying to correct what's going on in revenue and expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins. And I think that it's a job I don't want, but it's a job I think should be done. And Congress does not seem good at doing it. Well, it sounds like you should quit while I'm ahead.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year. But the greatest market turmoil came in April. Has the recent market volatility presented Berkshire with opportunities? Pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
I can give you a good answer to the second part, which is no. 10 billion wouldn't have done that much, that is another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, it's really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a very short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, like I pointed out, if I've had 250 trading days a day, for however many years I've been old enough to trade stocks, got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240, and that was August 30th, 1930, and between that and the low, it went from 240 to 41. So if people think that it made a really major change, it didn't. If it gone up 15% instead of down 15%, people think they take that with remarkable grace. But if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world. And you will see a period certainly in the next 20 years, you'll see a period that will be somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. That's just part of the stock market. And that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest.